Hello and welcome to Hot Money Technicals on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our expert Brijesh Singh of StockAxis, Nilesh Jain of Anand, Rathi Shares and Stockbrokers, and Kunal Rambhia of The Street joined me on the show. Many thanks to all of my guests. Before we begin with the show with our analysts, let's bring in Yash Upadhyay, who has a chart on Britannia. Good afternoon, Yash. What does the chart indicate?
So it's a contra call, so there's a buy call coming in on Britannia. Off recently, there have been a lot of sell calls coming in on most of these consumption names. Their Q1 numbers haven't been that disappointing, but it is the management commentary to which most of the stock prices they have reacted. Britannia has yet to come out with their numbers, but the street seems to be factoring in the weak numbers, as we have seen the stock come off from the levels of close to 3,000 to as low as 2,600. Now this is where thrice in the past it has come and formed a bottom, so there's a triple bottom sort of a formation. Do keep in mind this is a high risk trade on Britannia, so thrice whenever it has come down to these levels, it has given a pop on the higher side. Take a look at the RSI on the weekly time frame as well, and around the mark of 40 is where it has its near term bottom. It has come down twice to these levels. Third time as well in the month of June, and it has gone on the higher side from here on. And with this setup, it looks like the risk to reward ratio is also favorable on the long side, but should it manage to break below this mark, it would be negative. Even in today's day of trade, from the low point of the day, it has moved up almost 30 rupees. So clearly at the bottom there is some amount of buying coming in, but Britannia remains a stock to watch out for as far as the long side is concerned.
Yes, the last time the two green dots that you highlighted, what was the average return post hitting that level?
So from around 2620, or where the stock is 2630, from there it has managed to move up to 3000, but that would be an extremely bullish call. In the short term, the 55-day exponential moving average stands at around 2870. So from here on, a target of 2800 to 2850 is also something that could be watched out for.
Okay, thanks so much for that, Yash. Brijesh, what does the chart indicate? Does it indicate a breakdown on Britannia, or do you see a bounce coming?
See, Darshan, if we talk about this chart, particularly the chart which Yash has shown, if we draw a line, since it has drawn a horizontal line, but if we draw a trend line, it's a descending triangle pattern chart. So generally it indicates a bearishness.
Okay.
If we take a weekly chart also, the lower highs formation indicates the bearishness for the stocks. No doubt pullback can be seen, but I'm not looking stock outperforming and would be touching 2900 mark very easily. Any rise should be used for going short on these stocks. On a downside, if we talk about 2450 to 2470 is the first level which we would be watching as a, suppose someone has got short on the higher side. So 2440 to 2450 is a level to watch for the first target. If that thing has been broken, then another 200 rupees downside can be seen.
At this level, you won't do anything?
No, at this juncture of 2636, I would be avoiding not long, not short, but rise, I would be going short. Suppose it trades somewhere around 2700, then 2950, one can go as stop loss and go for a short, play for the target 2450 followed by 2200.
Okay, Nilesh, what's your strategy on Britannia?
Well, absolutely. We have seen in the past two occasions, it has seen sort of a rally from these levels. This is the third time we are witnessing some sort of a, we still need some sort of a confirmation which will come about 2700. If at all it moves above 2700, there could be possibility of a stock moving towards the levels of 2900 as well. As of now, I would say one should wait for the confirmation. There could be possibility of a breakdown as well, since the immediate trend, very short-term trend is still looking weak. If at all it breaks 2600 on the lower side, there could be possibility of a structural breakdown. Then downside, maybe we can expect the target of 2300 as well. So as of now, we still need some sort of a confirmation.
Okay, stay away at this level. Kunal, what's the similar strategy?
So now when I'm looking at the weekly chart of Britannia, it's looking exactly same in terms of pattern as far as Reliance Industries goes. So now post set of numbers, we saw a big spike and then the stock broke down that 1250 mark. The same is the case here. 2600 seems to be the key level because 3 times the stock took the support at the same level. As of now, contra bet would give better opportunity. So if any follow through buying comes on Monday, I would go long, keeping the today's low as a stop loss. Okay. Expecting 2800.
At this level, you wouldn't do anything. No. Okay, so that's the consensus view, wait and watch approach on Britannia ahead of any kind of move. But let's start with the first round of charts. Brijesh has a view on Torrent Pharma. Remember, after the number, the stock rallied almost 8-9%. Do you believe that the post rally, the buying will continue? And why?
See, no doubt. See, first of all, we start with the high. This was 1962 high, and after that, it made a low of 1462. So, taking and drawing a Fibonacci retracement, stocks had reversed from a level of 23.6% retracement, even a 38.2% retracement. Stock has been trading above 50-day simple moving average, followed with the volume. The volume has been there, followed by the RSIs. The RSIs are making the higher lows formation. Generally, always I use this RSI as a higher lows formation, giving a confirmations. No doubt, stock has been trading about 69, 16, but my ideal level for the risk reward ratio was somewhere around, if it trades below 1600, one can go for a buy side with the stop loss of 50-day simple moving average, that is 1540 zone.
Okay.
And looking for the target of 1700 to 1707, the 200 simple moving average is somewhere around 1707. If anyhow we are surpassing this level of 1707, then the next level to watch would be somewhere around 1775. So at this level, I would be avoiding, but dip should be used for accumulation purpose.
Okay, at this level you won't do anything.
No.
If it comes down to levels of below 1600, that is the time you would
Because
buy.
your risk reward ratio would be in your favor.
Okay, that's the time. So it's a more like a positional call if something happens. That's the view that you're saying. Okay, thanks so much for that, Brijesh. Nilesh, what would you do on Torrent Pharma? It's rallied significantly. Would it be a similar strategy, or would you accumulate at this level?
Absolutely, I have a similar strategy since we have already seen a run-up in the previous 3 trading sessions. So I think if at all stocks come down towards the levels of 1600, there could be possibility of again going long, since the risk and reward would be in favor. As of now, like you mentioned, the risk and reward is not in favor for the bulls. So I would wait for the some sort of a pullback or some sort of a correction towards the levels of 1600 to 1580. That should be the ideal level to go long, with a strict stop loss of 1480 for the upside target of 1700.
Okay, that's the view. And Kunal, what's your sense?
So now I'm trying to look at the weekly chart of the same stock. Right from the bottom of 2013 till now, there is a trend line which is which is touching almost all the bottoms. This time also stock reached that level, made inverse head and shoulder formation on the daily chart, and the breakout was seen on the higher side. 1585 seems the ideal level, 1585 to say 1600 mark, where it will come to retest the neckline again. That can be the best level to add. Certainly this stock is poised for a new rally.
Okay, that's the view that's coming in. Consensus long call, but the timing will differ. Two of our guests do believe if the counter comes below the 1600 level, start accumulating the counter. The next chart is by Nilesh. It's on ICICI Prudential. Remember, the numbers were extremely strong and the stock did manage to rally in trade. Let's have the chart, Nilesh. We can have you up. Why are you bullish on the counter?
Well, Darshan, if you look at the overall structure, from this level, we have seen lower high and lower low formation was in place. Now, if you look at this structure, it is making higher high and higher low. So this clearly indicates the short-term trend, short-term to medium-term trend is on the positive side. There are a couple of factors that I want to highlight. The first one is trend line. If you draw this trend line, you will see here, no doubt it has provided breakdown, but from there we saw some sort of a correction. It couldn't break above the same and couldn't sustain above the same. Now it is again indicating there could be possibility of a closing above the same, given the fact that if you look at the volume in last couple of sessions, the volume is picking up. So that is one confirmation. The second confirmation, if you look at the RSI here, if we draw the trend lines, it is indicating a breakout from his symmetrical triangle pattern from his RSI, which is giving early signal that stock is ready to go further from this current level. Apart from that, there is one more indicator I have used, that is MACD, where we have seen a buy crossover coming in above zero line. That is again giving the confirmation. So considering a couple of factors along with that, yesterday we had July series FNO expiry. From there we have seen in August series a huge amount of build up of a long position in ICS Prudential as well. So given all the factors, I think the stock is ready for a new rally for the upside target of 424. That is the immediate level that I'm expecting from very short term perspective. Second target would be 444. One can keep a stop loss of 379.
Buy right now or buy on dips?
Yes, one can buy at current level as well. Well, one can utilize a correction of 395 to 400. So that should be ideal range for buying this particular account.
Okay, thanks so much for that, Nilesh. Kunal, what's your sense on ICICI Pru?
See, the structure is excellent. There is no doubt about it. But at the same time, the stock is giving enough opportunities to buy on decline also. So breakout plays certainly if the stock moves above the mentioned level. But at the same time, otherwise 390, 395 can be an ideal level.
What's the breakout level?
So breakout level can be placed at say 410. If someone wants to play above that, then fine. Otherwise 390, 395 392 seems the best level to enter. Otherwise, the stock is clearly poised for a new rally.
Okay, what about you? You also have a similar view on the bullish side?
See, obviously, the trend of the chart is on the bull favors. Now, any dip somewhere around 390, 395, what Kunal has said, one can use because your risk reward would be in your favor. Somewhere around 370 around is a nice support, keeping that thing as a stop loss. Play for the target of 440 or above that. Time frame would be a couple of months.
Okay, that's the view. The consensus view is bullish on Prudential ICICI. Buy on dips is also being recommended on the counter. Remember, all the three insurance companies, the life insurance company, be it an HDFC Life or ICICI Pru or an SBI Life, all of them reported extremely strong set of numbers. The next chart is from Kunal. It's on TCS. TCS has had its own set of problems ever since hitting a high and then it's managed to cool off significantly. You believe a rally can continue now on TCS?
Right. So, what I'm trying to do is I'm not trying to find out any breakout strategy on this because the stock is clearly in the uptrend. Right from the bottom of 2018 till now, the stock is managed to take the support of this trend line, which is in the green line itself. What I observed this time was that every time when the stock is coming down, it's taking exactly 4 bars. That's 4 weeks correction comes in, stock gets into consolidation and the trend continues on the higher side. The first correction was here, which was along with the time correction, where the bars were 8 bars. Right after that, every correction is of exactly 4 bars. Keeping that in mind, the recent correction is also of 4 bars. I expect the reversal to happen, and that's what we are seeing right now, that the candle is turning green. So, this bullish candle along coming back to RSI now. The RSI in this entire consolidation phase, can we just zoom into RSI please? Yeah, so this entire RSI is under the consolidation phase itself, which is near to 50, which is really good. If the RSI from here is able to manage till 65, then we can see a new high coming in the price itself. So there are 2 strategies here. The first is if someone wants to go long on the counter near to the support mark, the stop loss for the counter is 2080. Okay. Near to those levels, one can think of going long. If someone wants to play on momentum basis, then the high of this candle, which is placed at 2140, beyond that one can go long on the counter.
Okay, that's the view. Thanks so much for that, Kunal. Brijesh, what's your sense on TCS? Is it a buy or buy for you?
No, I would be avoiding because
Okay.
looking in the charts, the it's not been favoring higher. Means the upward channel slope has been there, but in that upward channel slope, the stock has been trading below the lower band of that channel. So probability at this juncture of 21.5 or 21.9, the stock has been doing would be avoided. But if it trades somewhere around 2040 or below that, then one can go for a long side. Right now, risk reward ratio not in the favor of the bull side.
Okay, Nilesh, what's your strategy on TCS?
Well, if you look at the daily chart, the chart is indicating that there is consolidation going on. So the overall structure indicates there could be possibility of upside. The stock is poised for upside rally. The strict stop loss should be placed around 2040. There is the base has been formed. I think the breakout is awaited. The breakout is placed around 2150. Above that, it will give the more confirmation, more confidence for the bulls. Upside, one can expect the target of 2200 as well.
Okay, that's the view that's coming in on TCS. Let's start with the second round of charts. Brijesh is up with his chart on Power Grid. Remember, Power Grid has been doing well compared to the other PSUs. It's managed to rally all the way from levels of 180 right now to 211. You believe that the rally will continue, Brijesh?
Sure. So again, if we draw a line, this is the Fibonacci retracement, the high somewhere around 225, 226, and made a low somewhere around 172. So the stock has already moved up to the level of 50% retracement above that. So when the stock surpasses the 50% retracement rally, it's a sign of a reversal.
Okay.
So right now at 211, the stock has been quoting. Even if we draw a Bollinger Band, generally Bollinger Band is used for the volatility. It has been surpassed that level with the increase in volume, followed by the RSIs. Again, when we talk about the RSI, I always say that the higher lows formation in the RSI followed by the base formation or the price charts, which is giving a confirmation of a bull sides. So at the present rate of 209 or of 211, if it trades somewhere around 209 or below that, one can take a buy call with a stop loss of 197. My first initial target would be the previous swing high, that is 225, 226 zone.
Okay.
If it surpasses, then the next level would be 235. Time frame to hold this counter would be a couple of months.
But what's the strategy? Should you buy now? Should you buy at lower level? What's the
Present
stop?
rate or 209 is the ideal level with stop loss of 197.
197. Okay, and you see it after a couple months, and once if the new all-time high, which is close to 225, if I'm
Yeah,
not wrong.
225, 226.
Yeah, if that is crossed, what's the level you see?
Another 10 to 15 rupees. 235 would be the ideal target for next time.
So more it's a positional call that you're giving
Yeah,
here. Okay,
yes.
thanks so much for that. Nilesh, Power Grid? What's your sense?
Well, from very short-term perspective, again, it looks positive. The momentum is on the positive side. It is likely to continue towards the levels of 215 to 220. It has a immediate hurdle which is placed around 220, which is again a previous swing high. So it has to break above the same to give more confirmation on the upside for the upside target of 225 to 230. As of now, the structure is no doubt positive. One can initiate a long position at current level as well. Buy on dip again could be the ideal strategy to initiate in power grid. On the downside, the stop loss should be placed around 200. Overall structure looks positive.
Okay, what's your sense, Kunal?
So if I'm looking at the again weekly chart from positional point of view, May 2018 the stock made a high of 215. Present week again the high is 215 itself, and there was a massive breakout near to 200 mark. So I think the stock may come down to retest that breakout zone before making a new high. So buy on decline. You can expect the counter to reach, say, on the lower side 203 or 4, best accumulation zone, and this stock is clearly making curve formation. So bright chances of breakouts coming to a false end, and again we get an opportunity to enter on the lower side.
Okay, that's the view that's coming in on Power Grid. The next stock is on Bajaj Paints. That's something that Nilesh wants to highlight. Remember, Asian Paints did come out with strong set of numbers, and post that all the paint companies have done well. You see more rally coming in Bajaj Paints, Nilesh?
Yes, right, Darshan. If you look at the overall structure, it has provided breakout from a symmetrical triangle pattern. Now, this is the pattern where this is a downward sloping trend line, this is a upward sloping trend line. The breakout came here. Now, we have already seen a rally of almost in the previous 3 trading session. I would advise one can utilize a dip towards buying opportunity. Dip towards 320 to 325 could be the ideal level to again go long. If you look at the indicator, it has provided, MACD has provided buy crossover at exactly 0 line. So that indicates the momentum is turning into positive and more likely to continue, just like the Asian Paint. We have already seen a rally in Asian Paint as well. If you compare Asian Paint with Bajaj Paint, almost have a similar chart. But here you could see more upside because it has provided fresh breakout, whereas MACD has also provided buy crossover. So from the upside target of 338, that is the immediate level that I'm expecting with a very short-term perspective, 5 to 7 days. Downside one can keep a stop loss of 317.
317. And you expect, how soon do you expect?
Within 5 to 7 days, I'm expecting this target to come.
Okay, thanks so much for that, Nilesh. Kunal, what's your sense? Bajaj Paints, would you buy?
So no, this stock is on my radar since long, but on the weekly chart, the symmetrical triangle formation breakout is still pending, which is placed at say around 340 mark. Above 340, this stock is expected to rally for a couple of quarters. So I'm waiting for the closing beyond 340 before initiating any new.
Okay, 340. And what's your sense, Brijesh?
See, no doubt that what Kunal says, it's a symmetrical triangle pattern formation and is ready for a breakout. And what I've been witnessing, once stock surpasses the level of 335, 336, probability chances are that the stock would be heading for the 52-week high, that is 349 around, if I'm not mistaken. But initially, my target, which I've been looking for till stock has been trading out 305, the level on the higher side would be 370 or 375. And which I've been witnessing within a couple of months, we might try to touch the level of 370.
Okay, that's the view that's coming in on Bajaj Paints. Two of analysts believe they're waiting for the breakout level to come in. What Nilesh is saying that he expects the up move at least in the next 5 days, and another 7 to 10 rupees that will come in. The last chart, at least from our analyst, is from Kunal. It's on Bajaj. It's on Bharat Electronics. Let's pull up the chart. What are you looking here?
So this structure is almost same as what we discussed right now for Power Grid. The Power Grid, reason being there was a consolidation near to 200 mark on the chart and the breakout came in. I'm expecting retesting of Power Grid because of this structure itself. Now let me explain this entire structure. This structure is actually inverse head and shoulder right from this first curve, this being the massive second curve, and right now the prices which have come down is to make the third curve. Now every time when the prices have come down, there is a typical behavior of the stock, and that is 5 bars on the lower side right from September till now on the weekly charts. So here is a fall first, the second, third, fourth and the fifth time the correction is exactly of 5 bars. Now keeping that in mind, I am expecting some kind of reversal to happen at in this candle itself. Right from the bottom, the trend line is getting, this stock is getting the support of the trend line. This candle is turning to be a doji after the fall. The stock is expected to come out with, the company is expected to come out with the result session. RSI near to 50 mark, which is very well poised for the uptrend. Keeping all the entire structure in mind, if someone wants to go long on the counter right now itself, best risk reward is available, keeping the stop loss of 92, which is below the trend line itself. One can expect first target of 115, and above 115 this stock can reach up to 155.
155, okay, that's a massive move. Thanks so much for that. Kunal, Brijesh, what's your sense on Bharat Electronics?
It's been consolidating, 90, 92 on the downside, followed by 117 on the higher sides. See, overall trend which I've been witnessing is a bullish zone, and which I feel that the stock might try to touch a level of 117 or 120. Dip should be used for accumulation purpose with the stop loss of 90. Overall trend is been bullish for a long-term time frame.
Okay, Bajaj Auto numbers are out. I'll just come to you, Nilesh, in a while. Let me just address them. The revenues at 7,700 versus an estimate of 7,500. So it seems on the top line at least it's a beat. 1125 is the bottom line. I don't have the estimates on me. So if I can have the estimates, I will come to know what exactly the number is. Bajaj Auto profit. So profit is also, the estimate was 1080. So it's come in much higher than what it was operationally. Let me see what the margins are. But at this point of time, it's up 3%. Once my colleague Yatin mics up, we'll have more clarity. We'll have it. So before we move, just your sense on Bharat Electronics before I go to Yatin.
Well, Bharat Electronic, it is making lower and low formation in past couple of trading session. I would wait for the confirmation which will come above 105. So that is a breakout level from his lower and low formation. Once it breaks above 105, then the upside rally may continue towards 110 to 115 as well. So as of now, it is better to wait at the current level.
Okay, that's the view that's coming in. Thank you so much for that, guys. Let me move to Yatin, who has a sense of how the Bajaj Auto numbers are. Yatin, are they good?
Darshan, I wouldn't say it's good. It's largely in line with the street expectation. However, remember, Bajaj Auto had outperformed in the first quarter with respect to a 2% overall volume growth. So there was a good growth in the export markets because of which the margins were expected to be better on a sequential basis. Now, if you look at the revenues, they have come in at 7,755, a 4% kind of a growth. We were expecting a 2% kind of a growth. So on an overall basis, the revenues has been slightly above the street expectation. If you look at the absolute EBITDA, that has come in at 1,200 crores, and the margins have come in at 15.4%. This is again largely in line with the street expectations. And if you look at the profits, this time the other income is 440 crores, almost 100 crores up on a year-on-year basis, and that has supported the margins on the net profit front. So 101,011 is the kind of traction that we are looking at versus the expectations. The net profit has come in at 1,100 crores 25. That is almost a 1% growth on a year-on-year basis. So despite the EBITDA being under pressure, the profit is almost flat on a year-on-year basis. So broadly, the numbers for Bajaj Auto are in line with the street expectations.
Yeah, so what I'm also told is that the tax expense is much lower, the other income is much higher.
Yeah.
So that's why the profit beat has come in. Yatin, is the 14, 15, 16% the usual EBITDA margin now that we can expect from Bajaj Auto? Initially, they used to do more than 20%, and they used to always mention that they're doing more than 20. Now, is this the new normal for them?
So, Darshan, if you look at it on a year-on-year basis, of course, the margins are under pressure because in general, the product mix for Bajaj Auto has changed. We have weaker volumes, which clearly means negative operating leverage for auto companies. And more importantly, this time, we have seen the lower end of the market for Bajaj Auto has been higher in terms of volume growth. So the 100-125cc motorcycles across the industry is selling better than the higher end motorcycles. So the product mix was slightly weaker. And since the product mix is slightly weaker, three-wheeler sales are coming from a huge base and there is negative operating leverage there. So probably this is the kind of margin which was there last quarter as well. This quarter also nothing great. However, they have been able to maintain the margins given the price hikes that they were taking in the first quarter.
Okay, thanks so much for that, Yatin. We'll watch out for Bajaj Auto. It's cooling off from the highs of the day. But finally, the last chart that we want to talk about is from Yash, and it's on HDFC Life. Again, we spoke about the insurance companies doing well. Is it a bullish chart?
Actually, it's again a contra call. So the RSI is suggesting a sell signal on HDFC Life. Again, this is the weekly chart. It doesn't have a very long history, so keep that in mind. But the kind of rally that we've seen from the levels of close to 350 to as high as 500 now for the counter. Most of these life insurance companies, they've done well. Their numbers have been very good, and we've seen the kind of rally. But on the weekly time frame, this is the first time in a very long time, in fact, since the April of 2018. So over a year that the RSI has now crossed above the mark of 70. So it's crossed above the overbought zone. So this indicates that, now on the higher side, there could be limited upside. Even over the last couple of, weeks, what we are seeing is the high upper wicks on the candle. So if you could take a look at how the candles have been placed, the higher levels, which indicates the highs at these points, most of the bulls, they have not been able to, take the price higher from those levels, and we have seen selling coming in at higher prices as well. The RSI 2 indicating an overbought mark. The 500 mark is where it had come earlier as well in the month of August last year, but then the whole IL&FS crisis happened and we saw how the markets came off. So since then, the stock came off, but we are sort of preempting a pattern over here. We could see a cup and handle sort of a formation. At 500 is where it is at the neckline. It could give a small bit of a correction, but this is again a high risk, high reward sort of a trade. So at around 500, keeping a strict stop loss at around 510 on a closing basis, one could look to go short on HDFC Life.
Okay, 500 HDFC Life. Thanks so much for that, Yash. What would one do? Are you bullish or bearish?
See, what Yash has said, if we look out the candle right now, the last candle which is in making, it's an inward hammer pattern, which indicates the reversal signs. So what he has said, 510, 520 is a resistance zone. So presently, if someone wants to go for a short side, they can go at the present rate with keeping a stop loss of 515 or 20 and look for the target of 480 or below. I think 450, 460 is a zone where the nice support has been there. So suppose someone wants to go for a long side for a year perspective, they can buy at that level. For momentum, 520 would be the stop loss, or 515 would be the stop loss. Play for the target of 480 or below.
480. What about you, Nilesh?
Well, the stock is making higher top and higher bottom formation from last 4 to 5 months. So immediate trend indicate it is on the upside. There could be possibility of a pullback rally from a high level since it has formed a shooting star kind of candlestick pattern in yesterday's trading session. There could be possibility of a small pullback. Again, I think one should wait for the confirmation on the short side. It will come below 480. So the moment it breaks below 480, there could be possibility of a stock correcting towards the levels of 430 and 420 as well. So as of now, I would refrain going short at the current level.
Okay, Kunal, finally.
No, so my view is certainly in support with the Yash view, because the stock is near to that resistance mark, shooting star on the candle. At the same time, there is a rising wedge formation. Keeping all these factors in mind, risk reward ratio is very favorable for shorts. I expect the counter to make the lows of near to say 440, 450. But certainly at that point of time, that would be an attractive buy.
Okay, that's the view that's coming in on HDFC Live. But with that, is a wrap on this edition of Hot Money. Let me thank my guests who have come in today for this show. Kunal, Nilesh, Brijesh, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg.